Okay, it's midweek already. It's the start of June. We are half a year through. Today is the 2nd of June, 2021. Welcome, everyone, to the Bretton's midweek webinar. And this is, my name is Kenny Simon, and we are conducting the 3 times weekly Bretton's webinar that falls on Mondays, every Wednesdays, as well as Fridays. So I've got some very exciting news that I think would move the market more than news. It would be risk events, and also we want to take a look at the aftermath or the after effect of the June's OPEC meeting yesterday as well, which actually closed with a positive note. So we want to take a look at oil. We want to plan a little bit, look at what we can actually take from oil, both Brent as well as the US oil. The US oil first and then the Brent oil. So we've got some positive movements, some areas to look out at in terms of price action as well. So before that, let me just, we always go out of the chart first to actually look at sentiments, risk on, risk off, what are the latest news, what are the latest risk events that would actually be impacting our trades, impacting the markets, the trends, and impacting the way and how we actually choose the right pair to enter and exit the markets. Okay, so this is where we will start with I've gone through a couple of news in various channels as well, and I see that we have got the focus would most probably be on European pairs, and it would impact Europe and US a lot because I want to talk a little bit about a very, very important event that might spark out as a black swan. A black swan is actually a unpredictable event, and unpredictable event that usually is geopolitical, political. It could also relate to some type of war. We've got various types of war going on nowadays. It may not be physical type war, it may be a currency war, it may be biological warfare type thing. So cyber war, so all these kind of stuff. And there is a war that more like a conflict, a very big tension between Russia and Ukraine, and that has got to do with their Budapest memorandum. So I look at the potential of a black swan event impacting the financial markets, and because it has already been going on, this tension for 7 years between Ukraine and Russia, and now the question is whether or not US will actually come in and basically get involved much more, because the Budapest Memorandum includes Russia, the UK, and the US. And the memorandum itself, just to put it very simply, is just to have these 3 big countries protect and serve Ukraine in some way or another, mainly with cash support, with money support, with military support as well. But they have done the most of the support has actually been done from the material side of funds and money, but not so much on security, military, manpower in terms of army, soldiers, and all that. So there has been a bit of a conflict right now, and that can actually have a ripple effect on commodities, on oil, and all that, and also on gold, because if the tension builds up, if US goes into the picture, then we will see loads of tension, fear, and all the sentiments build up to actually push the price for gold to actually go up, and also to push the oil prices and energy prices, oil and gas, to also go up, because there will be a lot of more cut of supplies because of the tension and things like that. So yeah, so we've got a lot to look at, but before we look at that deeper and go on to the charts, we want to also look at what could actually move the euro today from the data side of it. From the data perspective, we're looking at Germany's retail sales, as well as the ECB's President Lagarde speech today. So that would actually be a sort of a catalyst to move the markets a little bit. In terms of the heat map and all that, it's a little bit mixed. It has not been marinated by strong trend yet. So it's not really showing very clear, strong trends, only showing some moderate bullishness and moderate bearishness with some currencies. So if we go on to the top 10 focus, I think here, as far as I know, if I visited it earlier today, early in the morning, it was showing the focus on JPY crosses. So a lot of focus on JPY crosses, but not really showing me that the traders and investors are actually on safe haven mode. They are not buying JPY so much. They're actually letting go of the JPY. So we just know that a lot of focus on JPY pairs, as you can see right here, you've got JPY pairs. You've also got NZD pairs right there. And as we see in terms of clarity of trend, we can see that Euro NZD and NZD CHF seem to be upside for the Euro, and then NZD as well, NZD to the downside right there because of the market participation. But this is just to show what traders and investors have actually invested in their trade direction. But we need to be sure when we go onto the chart, once we pick the right pair as well, to actually look at that. So I would think Euro pairs would actually be good, risky as well, but then at the same time, we can see some trading opportunities, some volume, some movement volatility as well onto European pairs, especially Euro USD as well, because USD, it's now it's a time for majors as well to look at for today onwards. And Euro JPY NZD, from looking at the heat map as well, I see that Euro is moderately bullish, meaning that Euro is sort of picking up. So we want to look at what Lagarde will be talking about, whether it's a positive tone or not, to push and fuel the Euro up. And then we want, before the speech, we want to look at Germany's retail sales numbers as well. And Germany being the top country for the economy of the Eurozone, followed by France and then Italy, or Italy and then France. It's actually quite close. All the three of them are superpowers in the Euro in terms of economic contribution. So if it is positive on the German side, then I think it will be also positive note from Lagarde's speech today. So then we will see more upward tick of the euro. But again, it's very risky to think of that right now, or to think that way and say that, okay, one goes up, one goes down, because of this black swan event that is expected to happen, and to look at what's the ongoing tension is all about between Russia and Ukraine, because anything can happen at any moment of time. That's why it's called a black swan event. So a lot of traders and investors are actually having sort of like the thinking cap, but also looking at black swan type trading, meaning that you cannot rely on your strategy so much, your EA algorithms. A lot of things can actually just go haywire as well, because this is something unpredictable. We don't know what could actually happen at the borders as well. We don't know whether Russia would just take over Ukraine, send in all the troops and no support, but want to bully them instead of supporting them. And then maybe US would need to come into the picture and be the big brother again, and then get involved. And then when they get involved, then we've got loads of tensions in the financial market, especially the energies market. And then we see lots of volatility, a lot of risk, and a lot of trading opportunities, but we have to trade carefully. So this is where I would like to warn traders as well, especially those trading majors or even Euro USD and Euro crosses, especially, just to be very aware, not place your trades too confidently, to leave it open for too long. Take small trades as well, and monitor your resistance levels, your support levels, especially with your psychological number levels as well, because this is where we need to be quite careful, but then careful and also beneficial to the market, to benefit from the market in this tense time as well in the market. So we have actually seen GDP expectation of Australia as well has actually gone up. So there are some nice opportunities, I think, to the upside for AUD versus the USD. The only thing right now is it's in a limbo of what exactly the trend will be for the US dollar and the US economy in general. It has been positive as of yesterday, if I'm not mistaken. We've got some positive manufacturing numbers, ISM and PPM and stuff like that, PMI, purchasing manufacturing index and all that has been positive. So that has been the reason why the US dollar has been contributing in the bullishness of the dollar, but bearishness in the in gold. So gold is experiencing right now a bit of a correction, but I just want to also sort of remind everyone that we had a little bit of a tip to buy at any time, but the TP, you guys should already have hit that TP of 1912.40 and shouldn't have any sort of floating buy trade at this moment, because you would actually be losing. So at this moment of time, perhaps close your buy trades, and we just want to be very careful at this moment of time, because anything could spike down so aggressively and then go back up, or vice versa at this moment of time, because it is very geopolitical driven. So something can spark off in Russia, between Russia and Ukraine, in this very moment, and then the whole market can actually change. So that's why people are talking about black swan trading. Okay, so anything can happen anytime, but big moves as well. So that is just expected, but not a guarantee that this would happen. But it all depends on the news right now, what's going on between these two countries, because it's a big ripple effect in the energy sector, and the energy sector is a huge contribution to the financial markets, and it's all basically it's sort of connecting the dots, and also connecting with all the other financial markets as well. Okay, so that is for gold, and we'll go back to gold as well. But then we want to always just look at a couple of hints that we can actually find outside of the chart first. Okay, so that is number one. And also, let me just look into my notes right here. We've also got yesterday's OPEC Plus meeting, and it went on a positive note. So that was what has driven oil, crude oil, especially US oil, up by 1.5%. So that is still going on. We want to look at the charts as well, and find out what can we actually trade as of today, including currencies, also oil, gold, almost everything actually, but then we want to find the right timing for it. So OPEC Plus, it looks like the demand is actually quite steady. They managed to come up with an agreement, come into agreement for controlling supply, meeting the demand. So the demand is going to be steadily up, and then the production will be steadily controlled, and that would actually be rising demand and reducing overall the supply. So that actually means that it's got a positive note, bullishness progressively for oil. Okay, so that's a good sign, and we just want to look at where about would that bullish zone be for us to actually trade on the technical side of it. Okay, so that is basically it. The other thing as well is that oil would actually then be supporting the energy sector with what's going on, or what's expected to go on between the tensions between Russia and Ukraine will actually spark off the other energy sectors as well, together with some manufacturing, some stocks indices as well. So there's a big ripple effect that might go on if this sparks off, more on a serious note today. Let's see. We don't really know that yet, but we are waiting for more news and more developments between them, and we want to look at how much US is going to get involved, or even the UK. Okay. All right. So also at this time around, it looks like, because this geopolitical type event, like a black swan, Russia versus Ukraine, has also some other political games connected to it. So we can see that when this tension has actually happened, the Erdogan Prime Minister has started. Prime Minister Erdogan of Turkey has started to make good relations just couple of weeks, couple of days ago as well, with Vladimir Putin in Russia. So that actually might spark off some things. And he just announced as well lowering interest rate in Turkey. And that basically means that a lot of traders who are interested in trading the USD versus the TRY, which is the Turkish lira, basically will benefit from a very big bullish run, because the Turkish lira is dropping and the USD is still seen as much, much stronger than the Turkish lira. So a lot of traders are actually on the carry trade as well and buying the USD TRY. So that all does come up to become a sort of strategy by investors and traders when they look into all this political type event, and they connect, and then they look at what could they actually be trading and investing on. Okay, so that's on the exotic pairs side of it. Now we want to also talk a little bit about Australia dollar versus the USD. I've mentioned earlier on that the GDP, gross domestic product of Australia, has actually gone up by 0.6%. I think, no, the expectation was 0.6%, but it managed to beat expectation and went up to 1.1%. So that is a very nice bullish run expected for Australian dollar versus the USD. Now it is trading in a range. We can take a look at that as well, between 0.7700 to 0.7800. So it's about 100 pips range sideways. It's trading right now, awaiting a breakout, possibly to the upside, but we don't know that yet, because we're still in a very sensitive mode with regards to breakout, especially with what we're expecting on the geopolitical side of Russia, Ukraine, and various other things. So we want to be careful, but we've got opportunities just waiting, and we're looking into bigger breakouts fueled by geopolitical events as well. Okay, so we want to watch out for the June FOMC meeting as well, because this might be an impact to Australian dollar versus the USD. And the RBA, the Royal Bank of Australia, did actually mention something in the speech the other day. I think it was yesterday late. And they did actually say that they want to maintain easy monetary policy, which basically means that they want to pump in more money, like tapering into just print more and then have the Australian dollar value up. So that is a hint. So that could potentially bring about good trading opportunities on the buy side for Australian dollar versus the USD, but we don't know that just yet until we go onto the charts as well shortly to confirm entries and exits, and whether or not we should or not enter right now, or set up some pending orders. Okay, we'll take a look at Australian dollar versus the USD for sure today. So I've talked about USD, Turkish lira, that's on the exotic pair side of it. Now we'll talk a little bit about gold. Gold is just going through a little bit of correction at this moment of time. Maybe it is planning to, to have that buy low, sell high kind of thing. So we don't know yet. But then it's best if those who are trading to exit their buy trade as of now, and they should have been exiting at 1912.40, as I've mentioned earlier on, because right now it has gone under the 1900 psychological level. So it is signaling a correction at this moment of time. And the main reason it has got to do with taper talks. Now they want to pump in more money, they want to print more money in the US. So that was what has gone on. And also together with that, the US manufacturing data was positive. It hit 61.2 in terms of data point for the ISM manufacturing index. They predicted it at 60.9. It went up to 61.2. So that was very positive in terms of data, economic event for the US manufacturing side. So that was what has actually pushed up the US dollar and pulled down the gold a little bit. But then we want to be very careful with this as well, as I've mentioned, mainly because anything can happen anytime. If there are tensions out there, US goes into the involvement of that tension again, and then what would happen is US dollar will start to decline, and then gold will go up much more. Okay, so in terms of stocks and indices, if we look at DJIA, which is Dow Jones, it was among the three DJIA, S&P 500 and the Nasdaq. Both S&P 500 and Nasdaq, they were down, and only DJIA or Dow Jones actually sort of appreciated by 0.3% as of yesterday till today. So also with that, I think there's a lot of hype at the moment in terms of stocks. Stocks, both GameStop and AMC Entertainment has gone up crazily high, and that has got to do with the Reddit day traders as well. We can always focus on that another day to look into Reddit day traders, and also what is the short squeeze strategy. And this is mostly interested by stock traders and also Bitcoin, cryptocurrency traders as well, to know what short squeeze strategy is, and also MAME type stocks, or stocks that are actually not pushed because of performance, stocks that are actually pushed because of gossips out there, okay, tweets and various other things. Okay, so that's basically it on the stock side of it. Let's just see. I think I've covered most of the important ones. So let's take a look at the Action Forex as well. Just to look at top movers once more. As you can see, we have got clarity of trend, Euro NZD, NZD CHF, and GBP AUD on the upside for GBP, on the downside for NZD CHF, as well as Euro NZD. So looking at Euro crosses, because we're interested in riding the trend, looking at what would actually spark off which pairs and things like that. We want to also look into the economic calendar. So as of today's economic calendar, as you can see, we may be looking at more impact to the euro in general, especially when it comes to high impact news. So high impact news are mainly Germany's retail sales figure there has been marked right there. So it looks like it's on a positive right there, if I'm not mistaken. I don't know why it's got red color right there. It's supposed to be green, but I'm not sure. So what we can actually do is always to check a little bit. Just go onto Google and type Germany retail sales. One. Just go to the news side of it, and then you can see 1 hour ago, Amazon day sales, some entry. No, it's not very accurate, that one there. German. There you go. German retail sales has risen by 4.4%. So yes, it's a green versus April's 10%. So euro is, it looks euro here as low, 10.1% expected. Euro USD in lows as in its prices. So I think it's got room for upward rebound. Euro rebounds on superb German retail sales. So that is a hint right there. So we can actually start off with the Euro USD and look at what's going on right here. Now, this is on the 4-hour chart. I have laid out, I think, a couple of days ago, if I'm not mistaken, the rate type zone, this area right here. So it is looking like it is correcting, but perhaps finding support anyway down here at the 2180, 1.2180 area. Now it's only at 2212. So we want to look at whether or not it's got areas that it wants to find very strong support in. There's one that is the most recent one here, looking at 4-hour chart. If I look at this bullish candle right here, its opening price is at 1.2197. So 1.2200 is definitely a very strong psychological level as well as support. So you want to look out for the 2200 area. So in my guess, I think it would want to actually find support at that area right there. It's going down a little bit slowly, but it might have intentions if driven or fueled by positivity of what's been going on in Germany in terms of retail sales, then that area there could actually find support there. The only concern is that when I look at previous candles as well, daily chart, also weekly chart, I just don't find very huge confidence in buying above this area where I've laid out red and going above. If I look at it most recent, I don't have a major, I would say, bullish mother candle right there. I don't have it here. I have it here and here, but sort of limited in all this area right here. And if I go up, I need to go a little bit further, and I see that it's not here as well. We've got a little bit there, a bit of bullish candle right there, and then maybe some more right here. And it's just not very confident until we move much higher, then we can actually see more bullishness. We've got it higher here as well, and then some there, but sort of limited, and it's giving us a hint that yes, there may be some bullishness, but not to look at the short-term buy so much for Euro USD, because I think there may be a surprise in the market for Euro, and Euro may be more negative than positive. We don't know that yet, but yes, we do have a little bit of bullishness right here, bullish candle and all that, but it's not very confident, especially if I find that bullish candle going on and on like really long and a lot more in all the previous movement as well, and then most recent one is very important. The more recent you find the bullish candle, the bearish candle, that basically is giving you the frequency of it and the recentness of it. If you have to go back too far, and then while you go back too far as well, you don't see that big bullish candle pushing price up for Euro, then it is warning you about this whole area here, whether or not it is a buying zone. For me, it is a little bit of a buying zone based on only one or two previous quite far back bullish candle, but not very confident. The other thing as well is that we've got this resistant area right here. So in other words, for Euro USD, don't get overly excited with a buy. If you are thinking of buying and then you see that it has actually gone up, try to plan your trades accordingly with 20-30 pips, but tweak the entries and exits, especially your TPs and your entries with psychological level. So 1.2260 can be a buying price, and you want to take profit at 1.2290. That stays as it is, as what I've mentioned on Monday, if I'm not mistaken, on the Monday's webinar. So that still stays there as a pending order, but not very excited with it, because what I can see is that if I look at this area here, is dominated by more bears and more bearishness as well. So I'm expecting that if something actually does happen in terms of risk event and something negative announced with by Lagarde, for example, or anything from the risk event like Ukraine and Russia, because it's considered and categorized as Eastern European bloc, then it would then have still that ripple effect of the Eurozone as well in general. So this is basically it. Also because these countries are supporting economically their energy to the European bloc quite a lot. So there's definitely some type of ripple effect that is expected. Okay, so this is for Euro USD. Not very confident, but I want to take a look at other pairs that might give us a little bit more trading opportunities that are more confident in terms of its direction as well. Now we've got Euro AUD right here. Does not look very good as well. Right there. We've got some movement to the upside, Euro versus the AUD. If I look at the 1 hour chart, it's trading at 1.3788. We see the ADX as well, not too bad. Let's check. It's overall an uptrend. It's moving quite fast, quite nicely, but the strength is not there yet on the 4 hour chart. If you look at the ADX, but then on the daily chart, it's got some strength, but it's got some threat as well in the daily chart because we've got the 200 EMA there sort of blocking the way right there as a very strong resistance potentially. I think I'll get rid of that yellow line. Give me a second. Okay, so not very clear on Euro AUD as well, shorter term, but I think it's probably best for us to venture a little bit, look into other pairs, especially commodity pairs, Canadian dollar pairs, and let's just take a look at the Canadian dollar versus the JPY, because this is a favorite pair when it comes to oil's movement. So if there's oil movement, CAD, CHF, CAD, JPY, CAD, AUD as well, may seem to be more, I would say, more interested by investors and traders. So let's just take a look. I can see that it's moving quite nicely on the upside. It's got a bit of trend clarity as well. On the upside, CAD, JPY we're looking at. You can see on the 30 minutes itself, it has risen above all the three EMA lines, and then you compare it to the 1 hour, then things are getting quite clear to the upside, and then the three lines sort of tilted upwards a little bit more on the 4 hour chart, and the daily seem to be really clear and nice on the upside, and then only at the weekly. So we've got very nice consecutive time frame from 30 minutes right to the daily chart, which is quite good. And then we can see a lot of strength as well with the ADX, and the blue line is above all the above the level 25, except for the 4 hour, but it's got the upper time frame of longer term time frame signaling strength. So, and trend wise has been signaled quite clear to the upside as well. So what we can do is we will start to use the RSI as well to draw a trend line on the RSI on the relative strength index. Okay, period is number 5. And we want to just take a look at where about can we actually see what's going on. Okay, so I'll clear off the prices here. We're still talking about CAD JPY. We want to look at whether or not we've got opportunities there. Just want to clear off all the drawing lines, trend line, and everything else. Okay, so let's just check. We've got a clear sort of, this is the 4 hour chart, really clear upward type momentum right here. Okay. Trend line, just as simple as drawing some trend line as though the RSI is a line chart. So how I have used RSI is simply drawing trend lines and imagining it as my line chart, and this is my candlestick chart, but this is my line chart, and I just draw trend line. So here, for example, if I connect this, from high to high, and just do it like that. And I've got the low and low right here. Not sure why my it's not functioning properly. There you go. All right. So it looks like this is where it's trading against, and it's got some more space up here before it hits that trend line there. Whether it will hit that breakout, come back and go up much more, that would then signal more and more buying. But at this moment of time, from how it's moving, it came down here. So from here, went up there, came down. Now it's expected on the upside. So that is basically what's going on from the RSI side of it. I'll get rid of this and this. Okay. And it's the same right here. We had, see all these peaks right here, all the highs. If you connect at least minimum 2 touch points, but if you've got more touch point, better, of course. There you go. So you can see it broken out already. This is on the daily chart, broken out, coming back. So it's got more room to the upside from the RSI perspective, just to treat as a line chart, as I've mentioned. The daily chart seems to be really nice, really smooth. So let me just now look for area of risk. Okay, so you've got the price right there. That CAD trading at 90.89. So obviously it's got some risk level based on psychological number at the 9100. Let me just, okay, so 9100 at the top, and it found some resistance there exactly at the psychological level of 9100. But let's, so 91, and then we've got 90 80 as well. I just lay that out. 80 psychological levels. Okay, so then we know that this is based on a daily chart right here. We've got price trapped at the moment, more or less, okay, between 9100 9080. So we need to know what it's trying to do. Does it want to correct, come under 9080? Then you've got correction going on. But overall, it's a nice, smooth upward type trend. So I want to know whether or not above the 9100, do we have room? Do we actually have nice buying that has taken place with bullish mother candle in the past? That is what I want to know. So here we have got very big resistance right here. So you want to stay out of this level here. This is the opening price of a bearish mother candle that has driven price a lot to the downside. So 91.1011. So I think I want to stay away from as high as 91.20. Okay, so 91.30 onwards, I will consider wanting to buy only after it goes up and trigger my buy price of 91.30. So 91.30 could potentially be your pending order, but I've not confirmed it yet, mainly because I've not gone further to the left to see whether or not we have had some bullish candle above 91.30 or starting at 91.30 to push up the price. We've got bearish candle, not a good sign. It pulled down price much more, and that is another area needs to be highlighted as well. Is the, just put this one here. I'll mark it in red. Another resistant area, which is the opening price of the mother candle right there. And that was at 92.05, very close to 92.00. And that was a selling price, opening price of a very big mother candle right there, but then also some support areas. So support became resistant there, which is very powerful. And then look at that, exactly at the closing price of a bearish mother candle as well. So in other words, you want to watch out the 92.00 area as well. Once you break out at 91.30, maybe what you can actually do is now we need to look at mother candles, bullish mother candle from 91.30. There is one right here, so it's not all bad news. We've got another one right there, which is good. We've got several supports. We've got another bullish mother candle there, and then another here, double there. And yes, and all other very bearish and bullish mother candle going through that area. So in other words, yes, we do have momentum. Um, we do have potential for buying, but not too excitedly. So yes, you can do a pending order at 91.30. Buy pending order for CAD at 91.30, and then you want to take profit at 91.90. Okay, so that's 60 pips potential. So there you go. Or you want to be a bit conservative, you can actually buy at pending order by 91.30, and then you want to exit at 91.70. That's 40 pips. So if you want to take that first, then you do that pending order for CAD. It looks good in terms of trend clarity, and also oil's position at this moment of time might push up CAD as well, and CAD will correlate with oil, and we're looking at a lot of weakness of the JPY as well. So that could potentially be a nice small trade in stages for a buy for CAD. Any questions on CAD? You guys are okay? Yeah, pending order, okay? Right, just to be safe as well. Right. So I will, let me just write this down so that I don't forget. So I have shared a trade idea and a trade signal. I'll also do this trade at buying. So buy at 91.30, pending buy, yeah, 91.30. And then your TP, for me personally, I would take it lower at 91.70, 91.70 before it hits the 91.80 psychological level. Okay, right, there you go. So that's your first one. And then we'll take a look at how it goes. Now, from a big pictures perspective, I do also see a pattern going on here. This is a Z-like pattern. Usually it go about 200% high. So let me just check. Yeah, it has the potential to go this high right here because of the structure of the pattern itself. It's quite unique. Let me just show you. So I see a potential of the Z-like pattern. We call it the lazy Z pattern, or even the 5-0 pattern right here. This is the A to B. You double that up. You double that movement up this way. And that is how we predict how high it could potentially go. So we just want to have this as a big picture right there. And basically, it is predicted to go up this way. And usually when it reaches that level there, it'll come down to the same length as this movement here. So this is why it's called the Z, lazy Z, because it's not standing straight, it's just slanting. So A, B, C, go up to the C point and then come down to the D point right there. So usually the where it would actually land, come back down, is usually about 50% of this entire length right here. So that's what I see potentially as the big picture, but we plan in within this big pattern all the little ABCDs and various other things that we can actually look at, mother candles to the left and various other ingredients to make sure that we are trading it right. Okay, so at the moment, it is still battling a quite powerful resistance area that is very obvious right here, which has brought down the price to 1,600, 1,700 almost pips down. So that is a very significant drop just from here. But of course, we've got, if we go further, you've got more resistance, and more bearishness as well. So we want price for CAD to just tell us what it wants to do by letting it go, letting it do what it needs to do, whether it resists earlier or not. If it does resist earlier, it wouldn't have triggered our buy pending order at 91.30 anyway. So it's okay. And then if it does actually, push up and then fueled by any news or anything like that, then it would trigger this one here. Okay, so there you go. And from a big pictures perspective, that's your lazy Z pattern there. All right. Okay, that's CADJPY. Any pairs that you guys want to take a look at today? I'll just go through gold just very quickly. I hope you guys have exited and closed your trade and hopefully hit the TP at 1912.40 for gold. No trades for now for gold. Close your table. No trade. Okay. And this is basically just to see how much it would actually correct and come down to, because we've got all these bearish mother candles here. So I would think it would copy, mirror the movement of either one of these three mother candles. Okay, the shortest one is in this area at 1863. So we want to see perhaps it would actually go down and hit this area here and become a support. We don't know that yet, but we need to look at how it pans out. So it's more like entering or about to enter the bearish kind of zone, not really bearish zone, a corrective bearish zone. Okay, so you want to go down corrective bearish zone. You've got shorter take profit if you are looking into selling. And if you're selling right now, or you want to sell a little bit later or very soon, then make sure you just exit before 18, let's say 1880 onwards. Okay, if you are selling. Yes, we'll take a look at UK oil as well, definitely. Okay. All right, so there you go. That's for gold. Let's quickly take a look at. I've got something interesting I've drawn on the US 30, which is Dow Jones, and we've got some room to consider, more room to go up this way. And I've drawn it geometrically with other methods that I have, and basically we're seeing still more positivity of the US 30. Okay, now US oil, this is the scenario at the moment. Okay, very bullish. It's looking more and more bullish. Very nice, very steady. We just want to look at resistance area to the left. Let me USD Canadian dollar is finding support as well. The black area, black zone area. This has been drawn quite far away. I think a couple of months ago, something like that. A couple of weeks ago, sorry. US AUD Canadian dollar. Let me just replace this with the oil, UK oil. Okay, there you go. So, right, so we've got UK oil right here, and let's just look at the daily chart. Let's look at how it is panning out. It is sort of mirroring what's going on in US oil, but on the slower phase of UK oil. We've got some very, very significant resistance, as you can see right here, right? So we've got the opening price of a bearish mother candle with no wick, very, very powerful. And then it became resistant here as well. 71.30, very, very powerful 71.30 resistant area, meaning no buy, no sell. Yet selling maybe, but no buy, because it's just too close to this area that took down price crazily to the downside. So it's too powerful an area of resistance to actually ignore. Okay, so what I see as a potential at this moment of time, just on the daily chart itself, is more selling type pressure and more selling opportunity as opposed to buying opportunity. Okay, so I don't see buying opportunity at this moment of time. I see selling opportunity. So especially for Brent. So despite what's going on, it's just technically too crazy to ignore the resistant area right there. So we just need to wait a little bit, monitor. You can actually use, it's already gone lower than 70.50. So it could have triggered your selling price 70.40. From now on, you can actually start selling already. And then maybe you want to take profit at 67.65 just to make it a little bit 67.68 maybe. would be better. But then I've got a lot of support right here. We've got the ending of that bearish candle, got some support right here, opening price of mother candles here as well. So you can sell now for UK oil and then take profit 67, 70, 67, 70, 70 as well, 67, 68, for example, you can exit there. Okay, just so that we don't get into the trap right there, because we are looking at this mother candle right here. So it's looking not too bad, but if we click on to ADX a little bit, give it a bit of an idea, it is definitely has got strength as well of the fall. That's maybe of a trend that is going on. It's got sort of given you hints that it just want to come down first, because it's already sort of created a border at the very top there. If we go to the highest time frame on the monthly chart as well, you can see very, very powerful resistance already set up all over here. Previous support became resistant and various other things. So yeah, and then weekly chart, very clear as well, right there. So I think the downward type movement would actually be much better. It's dominated by loads of bears to the left as well, which is good, giving me more confidence on the sales side of it, as opposed to the buy side. This is for UK oil. So there's something going on, I think, potentially that would actually impact oil to go down much more for the UK oil. All right. Okay, there you go. All right, guys, I think that's it. I think I want to take it a bit slow with giving you more trade ideas. It's just too early right now, in terms of the day and before I find out a lot more about the geopolitical side of it, especially the black swan and all that. But I think even more opportunities next week. We can still get some trades as of today, but just wait a little bit until the London Open as well, and then just to look at what we can actually look at. But look at commodity currencies, CAD crosses, AUD crosses, look at major currencies as well, because we've got a lot of political tension that might move the major currencies as well, especially Euro USD, USD JPY, AUD USD as well to some extent. And I think USD CHF. So you want to look at a lot of majors as well at the same time, okay? Okay, good. Shall we take a look at the AUD CAD? Let's just take a look at AUD CAD as well, Alfred. Thank you for that. In a second. Yeah, AUD CAD, we can look at it. Right, I have got USD CHF here. Let me just change that to AUD CAD. All right, let's take a look at AUD CAD. Okay, we've got a bullish zone that is further down, got some support. I think it's better if we clear this one out. All right. Now, looking at the daily chart itself, on its way downwards, we have had a very nice ABCD pattern right here, remember, AUD-CAD. But then looking to the left a little bit, we need to be aware with some very strong support right here. Okay, so I just want to put it a bit earlier, right there, some support right there as well. Now, the support itself, based on that previous candle right there, is as early as the 93.20 psychological level. So at this moment of time, 93.30, if you are already selling AUD-CAD, you should be exiting at 0.9330 if you are on the selling side of it. On the buying, maybe a little bit too early to buy right now. I want it to probably fall a little bit more and then start the buying only at 93.30. Okay, so it needs to come down a little bit more perhaps. Let me just see what's going on in the weekly chart as well. It's confirmed it's got some very powerful support coming up, so maybe it is trying to correct itself. Not sure yet, or maybe try to fall much more. We don't know that yet. We've got some bullish candle right here. Give me a second. 9360 in terms of the buy, right? AUD CAD buy. Yes. Okay. So 9360, it triggered that. So your buying, your TP should actually be the 30 pips, 9390, right? Correct. So 9390. So make sure you know what your stop loss is as well and how much you're willing to put for your stop loss in terms of per pip, in terms of USD per pip as well. Okay. So the way I look at it here, if I look at the weekly chart, there may be a potential for much more fall, but then your buy is just for temporary right now, a little bit of buy, a little bit of sell. But then overall in a big picture, it looks like there is a sharp type pattern that might actually trigger much more sell to the downside. Okay. So yeah, for that, I think it's on the big picture scale, it would actually come down a lot more. So there's something that will trigger more bullishness of the CAD and more bearishness of the AUD, because AUD, the Bank of Australia is talking about a lot of tapering, which basically theoretically will push the price up for AUD, but then technically it doesn't match whatever they're talking about there. But I think it has got to do with combining AUD with CAD, because CAD will actually follow the trend of oil. So I think if there are tensions out there and anything else, it will only trigger the price of oil to go up. So if it triggers the price of oil to go up, then it will trigger the price of CAD to go up. So I think that is the reason why it is looking more like a bearish, big picture for AUD CAD. So it doesn't really work with all the AUD pairs. Maybe the other AUD pairs are more positive. Let's see, depending on what it's combined or paired up with. Okay, so in this case, AUD CAD, it looks potentially a very big sort of sharp-like pattern that basically will look at it coming down a lot to the downside like this. Okay, so usually the downside, I mean, progressively, not as a straight line, would come down beyond this area. So you see the big fall. There's a lot of potential for the downside, but we need to take it progressively, little by little by little, so that we don't get surprised, attacked, or stopped out and stuff like that. But then overall picture, it looks bearish. If you want to look at short term, it still is falling, especially in a 1 hour chart right there. If you look to the left, you've got a huge candle right there, a huge candle right there, another huge candle right there. So we can say that on the 1 hour chart itself, it is entering the bearish zone already, okay, with the price. Now the price itself is at 93.38. It's already triggered an ideal selling price of 93.40. So you could have sold at 93.40 or sell now, for example, because it's gone under the 50 psychological level. But here itself, it looks like you have got the bearish zone right here. Okay, so this bearish zone has already sort of started, but even if you sell now or sell later, I think it's got a momentum that is pulling the price for AUD downwards right now. So yeah, it's ideal for sell more than buy. And it's got about, let's say, about 14-15 pips potential there. This is based on the short-term 1 hour chart. Okay. Potentially, yes. A current order buy, is it at a, I mean, that's the risk at the moment to take that trade for a very short buy. If you are looking at it losing at the moment and you just want to close it, yes, you can close it if you want. Yeah. Or you want to take the risk and buy and take and make that 30 pips. If it's giving you that 30 pips later on, it's entirely up to you. Yeah. Either way, whichever you are comfortable doing, okay, because that's got to do with the risk appetite side of it. So now it is definitely looking like it's entering that red zone. As you can see, it's falling quite fast as well. And if I put in the ADX right there, let me just check just to see the strength of the current trend. looking quite good in terms of strength of trend on the 1 hour chart, on the daily as well, not too bad. So, yeah. So if we're looking at the 1 hour chart, you're planning your trade, you're actually planning your trade for anywhere between 30 minutes to 1 hour. So it's really short-term type trade, just to see whether we can grab some pips right there. This is entirely up to yourself if you're going to do that. So it's looking not too bad, looking strong to the downside. It has actually found all this resistance coming under, and then I see it all under the 3 EMAs as well. So because of what's going on in the market with oil and a lot of political tensions and stuff like that, I think it's going to just trigger more strength for CAD. So that means AUD CAD would have more room to the downside as opposed to the upside. Okay. All right, so that's your AUD CAD, but at least we've got some bigger picture right there. We've got some backup of what's going on the fundamental side of it as well. Okay, more strength for CAD, more weakness for AUD potentially. Let's see. All right. Okay, brilliant, good. Okay, guys, so that's all I have for you guys today, and we'll see you guys again on Friday on Friday's market wrap up. Meantime, I think we've got lots of opportunities. We just have to look out a little bit and write big